Alright, what's up you guys? Late video for this week, but it was a long 3-day weekend. Let's go ahead and recap June 29 to July 2nd. July 3rd was the 4th of July holiday weekend. Typically after a 3-day weekend, traders come back on Monday refreshed and ready to trade, and more likely to continue buying stocks. So on Monday we should expect to see the stock market continue to go higher. Last week was very bullish. After the drop, it just continued to go straight up. So there was some really good rallies last week. Here we can see on the S&P 500 futures, we're consolidating between 3,000 and 3,200. There's no direction right now. We could go down. We could retest the 3,200, come back down, or we could trade in that range and then break above to all-time highs at 3,400. So right now it's kind of like you're sitting in that range where you have to wait and see now, because we are trading at this level right here where we could turn back around like what we did last week. Looking back, or this is today. This is Sunday. Futures are already popping straight up. You see, after a long 3-day weekend, they get excited again to refresh, ready to go, and look, it's already going straight up. But last week was pretty good for some stocks like Amazon, Tesla. These stocks just went straight up last week. Let's take a look. Here we go. On Monday, after the sell-off, Monday there was a dip, then it just held, consolidated, and then it started ripping higher. I actually bought Amazon stock here at $3, $3 a contract. I bought Amazon calls because I saw on the option flow that they were sweeping late day for like 2830s, 2840s. There's a few call sweeps at the end of the day, so I went and bought one call contract for like 330, right? And then what happened the next day, it popped up and I took profits because it was like 3-day expiration, and I figured, okay, that's good enough for me. I got my money, whatever, like $400 or whatever. But had I just held on to it, this thing just kept ripping. And here I would have been up like $5,000, but I had already sold it. Here it looks like, oh, this is done. It's overextended. This should come back down the next day, but no, this thing gapped up, right? Here I would have been up like 13,000 had I kept a one call contract for $300. $300 could have turned into like $13,000. That's an unbelievable gain, and I'm just kicking myself for selling in here and taking profits too soon. But on Thursday, it did sell off, and then it closed lower. It closed lower. So this was the first red day. In trading, usually when there's a first red day, this is a bearish sign, and you don't want to, go long the next day after that, because this could potentially break below this low here and come back down, and then it would like consolidate or go back up or whatever. But odds are that on come Monday this could potentially drop. But after a 3-day weekend, I don't know now, because I'm just kind of sitting on the sidelines now. Technical analysis says that this is going to drop, but then again, after a long 3-day weekend, traders are excited and this could go straight back up again. So Monday is kind of a wait and see mode if I'm going to trade Amazon, but we'll see. Tesla was another big gainer last week. I bought this one as well. I bought this one here when it comes after this big run up. People got squeezed. I bought the squeeze after it consolidated right here, and I was looking for a pop. I got the pop. I sold it here for like, $600, and then I thought that was it. It consolidated again. I thought, okay, Tesla's done. This is overextended, but no, it gapped up on news that their deliveries for Q2 exceeded what the analysts were expecting, and this thing shot up huge. This is a geez, 200, almost a $200 gain. So just like Amazon, these were huge moves. But since next week's a wait and see mode, you don't want to mess with these big stocks because you could go either way. I like the SPACs still. SHLL, still a good one. I was talking about it last week when it was here at the $24 range. I bought it. Here on the breakout, right? I said this was a good buy. I was going to add here in my video. I said, I like it here. I should add. I should try buying it, and I sold it, on this rip here. I got my gains from this one, and it hit $34, almost $35. So now it's sold off after everyone took profits. It's consolidating, and so this is again the ABCD pattern I like trading. You got the A, the run up, the B, the initial sell off, the C, the consolidation with the higher lows, and then we're waiting for D, the breakout above $34. So here, Monday, if you're buying below 28, you're using 25 as your stop, right? So you buy 100 shares here, you have a $300 risk, but your upside is what? 28, 34 at $6, that's $600 gain, right? Because you're going to sell on this breakout. So 6 to 800, so maybe sell it at 36. So you have an $800 upside versus a $300 downside. I think that's a fair risk reward trade. So you can't predict with 100% accuracy where these stocks are going. You can only make probability type trades where the ABCD pattern to me is a 75% win ratio. So here you have, I'm betting that there's a 75% chance that this does go back to all-time highs and breaks above it, and I'd be willing to risk $300 on this trade. If you want to risk less, buy it here, support it right here on this before it breaks below. So if you're buying it, and it holds the support, and a whole bunch of people like yourselves are all buying it at down here below 26, they're going to see that as a sign of strength. It's going to turn back up, and then it's going to break above this $29 high right here, and then people are going to start entering, like myself. I would start buying here, and then people are going to start looking for this breakout over 33 and then at 34. So if you want to be more patient and have less risk, buy it down here at 25. But if you're like me, I would wait to 29 to buy because it's showing me strength. But again, that's up to you. It depends on your risk tolerance. See, for me, I don't mind like putting $300 at risk because I can wait it out a little bit longer. But for people with smaller accounts, you kind of do want to wait down here at 26, have $100 risk tolerance, and then get that bigger gain, $900,000 gain to the upside. Let's see here. What other SPACs do I like? GRAF. This is the LiDAR one I was talking about here on Friday after this huge pop around 15. This one just consolidated all week and had a huge pop on Friday. This one, I think it went up too fast. I think it needs to come back down. It needs to come rest around 17. I'll probably add it down here. around 17 to 14. I like it down here. So yeah, so probably early profit taking. If this goes up, I'm not going to touch it. What's the other one? LCA. LCA looks pretty good. This is the Golden Nugget is going to do an online mobile gambling site. Here it is, online casino, Golden Nugget to go public through Lancadia acquisition. This one, the casino stocks aren't doing so hot right now, like in person. So they'll probably go mobile now that online gambling is legalized. DraftKings is also doing really well. So this one, if it holds $14, I may take a dabble in this one and wait for the breakout over 17, maybe sell it at 18. I could see this one going to 20. Let's see, what else? The casino stocks, I'm not really digging it, so LCA might be a small position. Workhorse, this one, they were buying calls up like constantly for the past 2 weeks. They're just sweeping calls. I believe this one, they're expecting a huge contract, and if it goes through, they're going to issue a press release and this thing's going to shoot up. I think this is already overextended as it is. So we'll see. It looks overextended to me. Whenever the MACD is in the ones and twos, I kind of want to stay away from it. I can see this one probably consolidating, or off the morning just start selling off to around 16. You're going to find support here in the 14s. I'm still waiting for it to come past 1260 here, and I would actually take it here in the $8 to $10 range. What else? PCG, PG&E Corporation. This one I put into the IRA. PG&E got hammered down after the wildfires in California. It was trading around $70 a share. On Thursday, they emerged out of Chapter 11 bankruptcy. So when a company usually emerges from bankruptcy, they're debt-free, very lean, and they have a lot of cash, right? And so on Thursday, it popped up pretty big. Well, not well, this term, it turned up. Okay, I can see this one going to $13 pretty quickly. Now that they're out of bankruptcy and they have that dark cloud over their head gone. If we take a look back here, 3-year chart, 2017, this is what happened. It got smashed down to $3.55. So now that the dark cloud is off their heads, this thing could potentially go back up to 20s, 25s, maybe even hit the 50. So this is a great opportunity to make 5 times your money if you're patient with it. Let's see, FMCI. This is the Tattoo Chef one. This one, it's not the kind of chart that I like to buy. It's kind of choppy, but the hype around it is pretty strong. So we'll see. If I were to take this one, I'd probably take it early before 18 for this break, and sell it on a break on 20. This one is more like a 50-50 trade because support's down here around $15, and I'm looking for 20. So 17.50 is where I would take it. See, this is a 50-50 trade. I don't like that. This is not the chart that I like to buy. Let's see, anything else that looks good. This is a new one. API. This IPO'd last week. This is the Twilio of China. Twilio handles all the online market. You know, when people like purchase something from a store online, they use technology that says, okay, you know, congratulations, you bought this item from this website, blah blah blah. They send you an email confirmation, text confirmation, things like that. Well, Twilio is the one that handles all of that stuff, and so this is Twilio. You know, they IPO'd in the 20s, got up to the 60s, but look at it now. It's at 235, right? 236, and API, I believe, since they're the Twilio of China, they're going to make the same move, right? This one IPO'd what, like 29 or 30 or something like that, and then it popped up, hit almost 60. So it's fairly new, and I can see this one, you know, chopping around before, you know, it eventually goes up to like $200 a share. So this is definitely a long-term investment on this one, but as a swing trade, I would like this lower. Probably take it here at 50. Maybe after it consolidates, you know, like it does an ABCD pattern where, you know, it does this, where it goes to like 60, comes down, sells off to 50, buy it, and then wait for the curl back up past all-time highs. But that's pretty much it. I don't see anything else that I like for next week. Again, it's a wait and see mode. You know, I'm kind of hesitant about actually buying anything next week. Yeah, it's right in this range where I really don't trust it right now, you know, because I don't think we're gonna break above 325. I think we're probably touching, come back down, because there's so many, you know, increases in the virus. You know, the virus is making a resurgence, but at the same time, it's like, well, the administration wants to keep the stock market up for Trump, for his re-election. So, I mean, again, it's one of those wait and see modes. You know, you kind of just want to wait for this break above 25 and then start buying again, or, you know, wait for break below 300, you know, and short it, you know. So right now it's kind of limbo mode. I mean, if anything, you probably, if you're a savvy investor, you probably want to do like one of those iron condors or something, you know, like just have it like sitting in the middle where you make money if it doesn't go beyond these ranges. But yeah, it is what it is, you know. I mean, next week is basically don't trade week, you know. Let's take a week off, in my opinion. You know, I think that this is going to trade in this range for some time. It's going to consolidate here. Let's see. So month of July. Let's see what gold is doing. GLD. Eesh. Let's take a look. 6-month chart. Okay. It's consolidating in the 165s to 168 zone. During the summer months, gold usually does really well. And then in August, September, then it starts selling off. Let's take a look at a 3-year chart. So yeah, so August here, now it starts selling off. So you see how June, July, it starts going up really quick, and then it sells off August, September. So here, kind of did an early start here, sold off August, September here. See, I think this is overextended. But yep, that's pretty much it, I think, for this week. There's not really much. Again, I wouldn't be buying heavily next week. Yeah, I can see this just chopping sideways for an extended period of time before making a move either down or up. So, but I mean, if I had to choose a direction, I'd say up. I'd say up. The bias is up, just because so many people have money. Alright, well, that's pretty much it. You know, it's not an exciting video this week. Yeah, I mean, don't trade next week, is you know, being in cash is actually a position, and it's one of the strongest positions to own. Alright, cash. Stay in cash. Alright.